Willie, we are back.
Yes, finally.
We apologize to our listeners on the long delay. It has been quite hectic the past several weeks, and we appreciate everyone's patience. So we're back. We look forward to providing some insight and what you can do about it. I'm sure everyone has been seeing the headlines on the economy and other matters, which we'll dive deeper in. But the first thing we want to do is send our deepest love and prayers to the people of Israel and to all the victims in the attack and their families, and to any victim. It's just horrible what has gone on, and we fully support and back Israel. Our organizations fully support Israel, and we hope peace comes soon.
Yep, and if that bold statement alienates some people, that's just too damn bad.
I totally agree with that. And one thing quick is we send a shout out to Bill Ackman. Really appreciate him and I believe Mark Rowan over at Apollo to stand up and to condemn the support at these universities. Now, we understand that some of these student organizations and these students didn't really read the statements that were practically supporting Hamas.
Yeah.
But, you know, as a student, as an alumni of Ivy League, and both of us students of school of top universities, there's no excuse. You have the intelligence to understand that what you sign off on, you got to read and understand. So shout out to Bill and to Mark. We appreciate your leadership on this, and we agree and we support that, and we too will follow through on that as well.
And if the groups send out statements you don't agree with, you can always release your own into the Twitter sphere that nobody reads.
Right.
Absolutely. You can do something, right? You can do
absolutely.
Something.
There's been so many arguments I've had with professors and with my fellow classmates through the years.
Wait, you argued with professors? You?
Yeah.
But I thought you were just the quiet kid in the corner, just taking notes and doing his homework and not making any waves.
I'm sure my classmates will agree, and my professors as well. But all love, and we just hope that many understand the magnitude of this and condemn any terrorism, and any terrorist groups as well. But again, we send our love and prayers, and we support Israel, our organizations as well. And let's move forward. Let's talk
about money.
Yeah, let's talk about money and
something pleasant,
how it affects you, the listeners. There's been a lot going on the past couple of weeks. There's raging. So we're gonna. Ranging from everything. It's been overwhelming the past couple of weeks since we've been gone. But I think today the highlights that we'll cover is TARP 2.0. Yes, you heard that correct. We'll dive deep into that. The latest on inflation. Debt continue to go up, both from the government level, which affects all of us, and personal debt, especially credit cards. The cost of all of this in personal pockets of everyone, and 401ks. There's some interesting data on that. And to sum up all of this at the end, we'll provide advice, again, not financial advice on, I have to be clear on that. Sorry to our lawyers. That we'll provide
NFA DYOR for all the younger listeners out there.
We will provide some guidance that we will do, and you can take it or leave it. Opinions. And you can take it or leave it. So we'll be some opinions that we'll provide. So first thing,
wrapped in the First Amendment on this show.
Absolutely.
Opinions only. Which one of these catastrophes do you want to discuss first, Vin?
Let's start with TARP 2.0, because I think that subject will really summarize the state of the economy and all the bullshit that continues to go on with Wall Street and the bankers and not listening. And now they're asking for another bailout. I mean, this isn't an official ask.
Right. This is from an op-ed. Yeah.
Right.
To be
it's
clear,
a
the
subtle
government
hint
are not supporting this right now.
right now, but it was a subtle hint from a influential banker in a top banking magazine. I believe it's the American Banker or whatnot. We don't read it because it's full of crap. But it was the opinion
I
piece
had a
about
subscription until right now.
TARP 2.0. So Willie, do you want to dive a little deeper into what TARP 2.0? Well, let's
because
explain
it
what TARP
hurts.
is. I mean, let's explain what TARP was, the first
Right.
one, and why now they're possibly asking for a TARP 2.0.
Right. Well, so TARP 1.0, as fans of Dexter and true crime shows out there know, TARPs are only good for wrapping up your murderous mistakes. But you know, back in the day when mortgages were awesome and housing prices only went up, aka 2008. TARP 1.0 was the Troubled Asset Relief Program. It was the $700 billion bailout that was super popular, especially among people that had adjustable rate mortgages and lost their homes. And now the American Banker magazine, which again is not a government entity, it is not a government mouthpiece, it is a magazine, published an op-ed by an individual named Paul Graham, who is an MD at Bridge 2 Partners. And this op-ed argues for why banks need TARP 2.0. In this case, it is a trapped asset relief program.
Sorry.
Yeah. Well, okay. So like we said before, we want to make it absolutely clear the government are not considering this at the moment. You know, we're not in the Fed or the Treasury Department. We don't actually know what they're thinking, if they're thinking, until they say it. But TARP 2.0 is trying to address the trapped assets that are currently held by banks. So the overview of that is, as of June, the banks in the U.S. had about $560 billion in unrealized losses in their investment securities portfolios. So what happened is what's called a bond duration mismatch, right? The banks are not stupid, believe it or not. They like to invest the money that you deposit because your money is not actually there, right? The banks keep a certain amount that's defined by the reserve rate, and the rest of it needs to be loaned out to generate income. They invested in various securities and so on. Well, what they were doing was buying long-dated securities, but the duration mismatch, long-dated securities is in treasury bonds, right? The safe investment. But we kept raising interest rates because guess what? Inflation is not transitory when you inject $8 trillion of money into the economy.
And by the way, real quick, we should have ripped the Band-Aid off in the beginning instead of dragging this on.
We've said that, absolutely.
Which we've said before, and this is why it's going to hurt more.
But why are you going to suffer today when you can suffer tomorrow, right? That is our mentality as a society. So banks basically have short-term obligations, but their money is in long-term bonds. So what ends up happening is this mismatch where the only way they can cover their needs is by raising equity. And we saw with Silicon Valley Bank, that didn't work very well. And as we saw with several other mid-sized banks throughout the country, banks really, really piss people off when they say they need more money. I don't know why. You know, you figure you put your money in an institution, it's supposed to be safe, and that institution is supposed to be solid. Not so much. So this TARP 2.0 is basically a convoluted scheme whereby there's warrants issued to the Treasury via the Fed, and the banks are basically going to offload all these assets that they're going to have to write down otherwise, and then we'll pay you guys back. It's totally cool. When interest rates go down, we'll square up. I can't begin to express how dangerous that line of thinking is, because you haven't actually gotten rid of the risk, right? It's not on your balance sheet now, it's on the government's, and you have an obligation, and you can avoid writing down these enormous losses. But it didn't go away. You still owe somebody something, right? So I think this is just another short-term band-aid for
yeah, and that's the
pretty
problem, right?
awful mismanagement.
I mean, Wall Street and banks continue not to learn from their past mistakes. And like the name TARP, they're just trying to cover it up and shove it aside and hoping that it just goes away magically, which it doesn't happen.
That's a good way of putting it. You're covering it up.
Yeah, and banks aren't acting like what banks were supposed to be, right? Banks are not supposed to be sexy. And, this is going to play a major factor. Now, we obviously always have been saying government is a major problem. They outspend, they're continuing to dig themselves in a deeper and deeper hole with debt, and that's costing all of us money, which we'll talk about here shortly. But banks are just as guilty, these bankers and these folks on Wall Street, and it's gonna be a double whammy for the next recession. And the reason why we bring this up is this is a deep concern when this is starting to appear from bankers and publications, right? Because God knows what they're saying behind the scenes now with their lobbyists and amongst one another. Now, we kind of know what's going on, but we can't really say. And this happens before every issue. Remember in 08, there were these signs, these subtle hints, and these certain things that were pushing prior to 08. Same with the last two recessions. So it's going to get very, very interesting coming up. And our opinion is a lot of our listeners should really keep an eye on who they're banking with and understand that FDIC insures up to $250,000. Some banks do more, but if you have more than that, make sure you disperse that. So really make sure you are comfortable with the bank you're at, and make sure that you are just keeping an eye constantly on your money in general. So for example, we love banking with JP Morgan Chase. They're not going anywhere, and they tend
especially
to have better,
after today's earnings.
Exactly. But Bank of America will be concerned because they lost $110 billion on their sheet because of these bonds, right? And we saw it coming months ago when we dumped Bank of America from our Fund 1. And so really everyone should be really careful with that. And something to note. Now, the next thing is inflation, right? We just got more inflation data, and we mentioned government debt and further debt. And if TARP 2.0 does happen, the taxpayers are going to have to pay for that. But just real quickly, let's go into inflation real quick. What's the latest, Willie, on inflation?
Well, it depends on who you ask. And honestly, this is a great example of using stats to prove anything, right? Because if you're on a certain part of the political spectrum, and you can figure out which part that is on your own, you see the headline inflation of, hey, core inflation, core CPI has been down year over year. Hooray. Bidenomics is working. Well, unfortunately, core inflation excludes food, energy, and depending on which metric you use, also living expenses, so mortgages and rent, and also I believe used cars. So all things that you don't really need to survive in the modern world. I can certainly do without food for at least 8 or 9 years. But if you and it's look, this isn't as duplicitous as it seems, right? Food and energy are infamously very volatile, but they're included in the regular CPI, the headline CPI, for a reason. And that reason is, they're volatile, but guess what? They also are reality. I don't know of many people who survive without spending on food, energy, and rent.
And that's key right there, right?
Right.
It's so annoying when we hear our peers. I mean, we have to admit there are peers, right? And watching the news, whether it's CNBC, Bloomberg, Fox Business, whomever, right? But then when you hear from everyday Americans, right, our friends, or just going to the grocery store and watching people. It's a struggle right now. And it's so infuriating when we hear about, oh, inflation's getting tamed a little bit more. Core inflation just ticked up a little bit, or it's going down. Everything's going to be okay. Soft landing. Well, guess what? No one's soft landing when they go in the grocery store, especially when we have a family and you're leaving the store without spending at least $100. I mean, back in the day, you just go grab, a dozen eggs, some milk, or some other miscellaneous things because you need it, in between grocery shopping, major shopping days, and you're paying $100. It's insane. And we keep hearing this, and it's just the amount of, I'm trying to find the right word here, the amount of disconnect from policymakers and their actual constituents, everyday Americans. It's pretty sad. Now, we're fortunate in where we're able to not have a problem with grocery shopping and paying our bills, thank God. But a lot of people are like that, but they're just barely making it as well, or they're having to make sacrifices now. So it is very, very concerning to see this. And we're seeing credit card debt continue to go up. We're continuing to see people using their savings accounts or depleting them. And we just recently saw this. 401ks.
Oh, yeah. The withdrawal, this is from Fidelity. The withdrawal rate for 401ks, what they call the hardship withdrawal rate, is the highest in at least 10 years. So it's not, people are trying to survive in any way they can, which is obviously required, but the way they're doing it is kind of the way the government's doing. It's with its fiscal lack of discipline. It's just kicking the can down the road. Yes, prices are high, so now let's use more credit card to pay for things like groceries and gas and auto payments, etc. Okay, well, you're going to pay that down the road. Oh, prices are high. Let's withdraw from our 401k. And yes, you take a penalty from that if you're below a certain age, but that's shooting your future self in the foot, right? Because that's money you have to re-earn for retirement. And retirement is one of those things that people don't think about because, it's decades down the road. I'm only 26. I wish, or whatever, but it's coming whether you want it or not, right? And it's this lack of foresight or this unwillingness to accept the future. And I mean, look, and I completely understand, right? I remember 2004, my monthly grocery budget was $200, about $50 a week.
Yeah, that's per week now.
Well, yeah, but I had no trouble hitting that because I'd always buy the store brand and always get stuff on sale, and I would buy whatever I could in Costco to get like the apocalypse sized jar of mayonnaise. But even now, just for fun, I go to the grocery store like, what would happen if I were, still a lonely, pathetic bachelor in 2004 as opposed to a lonely, pathetic bachelor in 2023? It's easily double.
Yeah.
More than double. And that's not good, obviously. And the fact that people are having to steal from their future selves, which is what you're doing when you borrow against your 401k or you withdraw it, the fact that they're stealing from their future selves to just be able to survive today, I think is a failure of our society as Americans. Like, this is supposed to be the land of prosperity. And the only thing we're prosperous with right now is absolute misery for the average consumer. And that's not acceptable.
Yeah. No, it's really sad. And, policymakers in our government are setting the tone for that because they just keep spending and spending. I think it's the debt's going up by 1.2 billion per hour, right? It's absolutely insanity. And people have to understand, the debt. Well, when a country continues to run up the debt and they're not paying it down and there's a major deficit, what happens is your money gets more expensive. That's why you're seeing credit card interest rates now going up to 23% average, which is insane. You're seeing personal loans and mortgage rates continue to go up. I mean, it's teetering on 8%. And because, and we keep saying this all the time, because the Fed and these policymakers, are not controlling their spending, but most importantly, number two, not ripping the Band-Aid off of interest rates, it's going to drag this on continuously. So instead of hurting for a short period of time, like spiking interest rates when we needed to, because we have to maintain this high interest rate, more interest rate increases, more things being expensive will continue on. And we don't see it going down anytime soon.
No,
unless
it can't.
Yeah, so it's what we warned about 2 years ago, and then again a year ago, and then again 6 months ago. And it's really sad to see that no one's really addressing this. And this is why it's important that our listeners really vote appropriately in the coming elections, this election, the next election, because that's going to play a big role in where things are at.
Yeah, well, it's, we are enamored with short-term results, right? We have all become Wall Street. And the simple fact is that you need to understand what goes into these numbers. Like, core CPI is down. Oh, but not really. The overall CPI is up, and half of that up was driven by rental cost, housing costs. So my favorite is the unemployment figures, right? Everyone, well, not everyone, half the country is subscribing to this this mindset that, well, unemployment figures are going low, the labor market is strong, etc. But it depends.
You gotta start digging in there a little bit, right?
Well, here's
a gorgeous house from the outside, and you walk in, and it's a freaking haunted house, and it's miserable in there with things from the 1920s. I mean, just
actually, I would probably live there.
Yeah, figures.
At this point, I'd take any house. Most people would take any house. Doesn't matter if it's haunted.
Yeah, I mean, two real quick things before you continue. I just want to make sure that I don't forget this. Number one is the amount of people having 2 full-time jobs is an all-time high. By the way, that's
447,000.
That's a really key number there. 2 full-time jobs. That is insane. At all-time highs. And then number two, the amount of full-time jobs exiting is really starting to be concerning. I mean, what was it last month was 646,000,
something like that. Yes,
around there, I believe. Or
about that.
I mean, please fact check me on the legitimate source. But
everyone's already Googling it.
Yeah, probably. But regardless,
about in the comments.
It's a concerning number, and it's starting to hit all-time highs in the amount of full-time jobs being lost. So those are two key things people have to remember.
Well, it's not just the full-time jobs being lost; they're also being lost from some of the highest-paying sectors like tech.
Right.
And okay, no one's going to feel bad for tech bros. I get it. But you have to look at the fact that you're taking a huge amount of purchasing power right out of the economy. Okay. And the 447,000 people who are holding 2 full-time jobs. First of all, I can't even imagine how the hell that works. And this
we run like 4 companies, so
Yeah. Well, I mean, this has come from someone who did work while going to undergrad. Like, you have to be super keen on time management, but you also have to look at the fact that the unemployment numbers that are being reported, first of all, when people say the unemployment number, they're talking about something called U3, okay, which is just a raw figure. What you should be looking at is U6, which is significantly higher. In fact, it's about twice as high as U3. So when you look at U3, like, jobs are increasing, the labor market is strong, hooray. But you don't look at the fact that 447,000 people are holding 2 full-time jobs. You don't look at what's called underemployment, which, the example sounds ridiculous, but I've seen it firsthand, right? You consider the engineering or physics PhD working at Starbucks. that's underemployment.
Yep.
And I hate to say it, but I actually met one of these people locally, and I thought they were joking. And I asked them some fairly technical questions. I don't think they were joking, which is super sad on so many levels, right? You cannot consider that on the same level as somebody who's working full time in nursing or in office work. Like, one of those people is underemployed in terms of earning potential, and you cannot look at people who are disgruntled. So, fun fact: if you get fired and you burn through your unemployment benefits and you're not getting rehired, and you're having no luck, you know what? Sooner or later, most people are just going to say screw it and give up. Nobody wants to hire me. I don't want to apply. Whatever. Screw you all. Well, you are a discouraged worker. You are not considered in the U3 figure. You essentially stop existing for the purposes of this statistic. But does that mean that you somehow no longer require sustenance and housing, etc., to survive? No, it just means that the stats are overlooking you. And that's why I tell people U6 is the real number. U6 includes the discouraged workers who gave up on trying to find a job. U6 includes the underemployed, who are working part-time or whatever. It's a lot more higher fidelity examination of the labor market. And I hate to say it, that number is a lot higher than what's being reported.
Yeah. And, we sound like doomsday people, but I hope our listeners know that we're not doomsday people. We just like to lay out facts and prepare people appropriately. Because
why do I have 6,000 cans of food then? If we're not doomsday?
Oh, yeah. I mean, I get so many calls, and we get so many calls from our friends and colleagues, saying, "Oh, it's it's not going to be that bad." It's like, well, look, you always want the friend in the room that's going to tell you the damn truth and not everything you want to hear. So we're doing that right now, and we just want to make sure our listeners are prepared. So, what does all this mean? One is we always have hope for America. America is the best place to be, and we will always get out of these situations. We always will. I mean, look at the history of America. Yes, we have rough patches, but whether it's geopolitics that's going on or the economy, we always persevere. We always do, and things will come around. But in the meantime, with these indications of banks struggling a bit, inflation continue to go up, real unemployment continue to go up, the cost of debt, we really want to provide an opinion in where we always tell our friends this: have 6 months worth of cash flow personally to pay your mortgage, your food, and everything else. Have about 6 month runway, more if necessary, right? But 6 months is the minimum. Number two is really everyone should be starting to bunker down a little bit, right? It's regardless if you're well off or not, always look at ways if you can pay down debt, because you're literally giving free money to banks into the system, right? So pay down debt if you can, as much as you can. That's reasonable. And then number three is just try to budget more, right? We're not saying don't go out to eat or don't do this and that. It's just do it within your means and not go over, because this is not the time period to go over and rely on credit if you don't have to. If you can pay off some things, do it. If you can build up a 6 to 8 month runway, do it. And just try to live within your means and try to save more. It's just not the right time to go crazy, because it will bite you in the ass. And the way things are going with policy making, with the Fed and with geopolitics, it's going to continue to get more expensive.
Right. I mean, just, I would add, the government can print all the money that they want to bail themselves out. But when you do it, it's called counterfeiting. It's yes, Alanis. it's kind of sad. I think you asked me in 2020 when the first of these stimulus packages were proposed. And by the way, student loan repayments just restarted. So the next month's or the next report of the economy, the economic health is going to be super interesting now that the moratorium's over. You know, I think you asked me about when inflation was first starting to rear up, whether or not a soft landing was possible. And I told you one of my favorite quotes from the movie Pitch Black, where one of the characters, I forget his name, he's supposed to be some religious archetype, says, I get the feeling this will be a lasting darkness.
Oh, yeah.
And that's unfortunately, what we're in right now. And these figures, especially with the job figures, 447,000 Americans should not have to have 2 full-time jobs just to survive, right? I shouldn't go to the local hospital and talk to one of the ICU nurses, pretty important job if you care about your loved ones surviving. And I shouldn't have to hear that she's doing her 312s at the hospital and then she's got, another 30 hours on her off days, to feed her kid and send them to school. Like on every single conceivable level, that's absolutely screwed up.
Yeah.
Okay. And we as a country need to have a lot more fiscal discipline. We need to swallow some pretty bad medicine, which is getting worse by the day. Rates need to go up, period. The inflation is not tamed. We need to have our recession now, because the longer that you put it off, and I know that sounds counterintuitive, one of the few speeches where Powell said something that showed a great amount of spine was basically what it amounted to is, yeah, I'll take hundreds of thousands of people unemployed over runaway inflation. He said it a little more eloquently than I do, which is one of the many reasons why I'll never have his job. But he's right. Okay, and the more we try to drag this out, the harder it's going to be, the steeper that cliff is going to be.
But where is his damn action? That's the irritating part. Is he needs to grow a pair, and
a pair of eyes,
and have a freaking spine, and just do it like how Paul Volcker did it. Right? It's this is the moment where we need leadership, and regardless of what the damn president says, he has no clue what he's saying. And to really hammer down on, we have to protect our financial system and the people in it. We shouldn't have to see people sacrifice what meal to have or what to buy and not to buy, and really hurting every time they check out just to eat dinner and just meals in general. And
and it's not an avocado toast issue anymore.
No,
right? That narrative is dead.
Yeah, it's just basics, right? Chicken, rice, and broccoli, or eggs.
That's $300.
Yeah, I mean, even cereal, right? It should not be that way. And the concern is this is looking like 1976. And if people, I mean, I wasn't alive, but I studied it. But you look at 1976, there are a lot of similarities, and we don't want that. Gas was out of control. Grocery stores out of control. Grocery stores out of control, pricing, and people are really hurting. So we really hope that policymakers gets to wake up a little bit based on this past week's data and go, you know what, we have to hike it. Rather sacrifice 3 to 6 months of pain and then have prosperity after that, than dragging this on and leading us into, God forbid, a depression or 2-3 more years of pain, right? I imagine a lot of people rather would just rip the Band-Aid, just deal with it now, and then be fine moving forward.
Well, you said, I mean, Powell needs to channel his inner Volcker. Yes, the Fed today is not the same as it was in the 80s. It's whatever, fine. I get it. That's not what I'm talking about. I'm talking about, doing what's necessary, even if it means earning yourself no friends. And you said not even an hour ago, if you're not hated, you're not doing it right. And I think that's absolutely applicable, especially to these positions. When you're at that level of leadership, you're not there to make friends. You're not there to appease senators from Massachusetts who are taking you to task for putting people's jobs at risk. You're not there to appease even the president. Okay, period. Yeah, they'll remove you, so what? I refuse to believe that somebody of Powell's intelligence and pedigree and experience can't find another job. Even quote unquote, even
do
just a
what's
book
right.
deal. Do what's right.
What's right.
Period. Like you are in those positions to serve, not to network, not to pad your own nest egg. That's why I am happy that my mouth will keep me from ever getting elected. But it is so yes, it is easy for me to say. But you're absolutely right. You have 330 plus million people relying on your decisions. You have to invoke some Malarian utilitarianism every now and then. And some people just have to bleed so the rest of us can survive. And it's temporary, right? Look at the history of recessions, with the exception of 1930. They don't normally last that long. They last long when you're not prepared and you're just, blindly doing stupid things like 2008, like 2020, like right now. That's going to set you up for long-term pain, period.
Yep. Absolutely. I couldn't have said any better. And as a reminder to our listeners, there's a lot going on. There's a lot to digest. You're all busier than hell with managing your family, your job, and just everyday life. And
just keep replaying this episode so our stats get better on Apple Music or Apple Podcasts or whatever.
But yeah, so more people can listen and be prepared. But we just want to thank you for trusting us and listening in. And we just want to make sure that you're all going to be okay. And the advice the opinions that we give, take it or leave it.
First Amendment protected opinions that we give on this show.
And we hope that these opinions can be of guidance and prepare you. Again, make sure you have a 6 to 8 month cash flow runway, which means let's say your budget's $5,000 a month. That includes all bills and food and sorts and gas. Make sure you have 6 to 8 months of that accumulated, because that gives you a runway. And make sure that if you can, pay off some debt, because that debt's getting more and more expensive. And number 3, just be a little bit more conservative. This is not the time to overspend or to have to, enjoy the luxuries quite yet, right? I mean, again, you go out to eat here a couple times. We're not telling you what to do, but just be prepared. Just start thinking a little bit more, because we don't, no one can ever predict the markets, right? Whoever tells you to predict the markets, they're full of shit. But we do see the writing on the wall, and there's going to be a little bit more pain going forward. So just be extra careful and just understand that this is going to be temporary, but hopefully shorter than longer is what we're hoping for.
Well, the long term is what always wins, right? Like the Warren Buffett video you sent me. I don't recall the name of it, but that's what I tell people. Just Google Warren Buffett videos. It doesn't really matter which one you watch, because they're all pretty good. But the one in particular that you sent me, he makes the point that in the 20th century, we had a massive depression. We had 2 enormous world wars. And I mean, people don't understand, like World War I, so many people died that the complete genetic makeup of most of the planet was changed because of it. Like literally, everyone sent their best and brightest and youngest into the meat grinder. We had 2 massive world wars. We had the Great Depression. We had the atom bomb, which is easy to argue changed everything.
The Cold War.
A species. The Cold War, the Cuban Missile Crisis, the Iran-Contra issue. We had stagflation. We had massive spikes in inflation. We had in the 1940s, people complain about taxes. In the 1940s, and this is on the Fred database, the top tier income tax rate, personal income tax rate, was 90%, which is insane. We've had countries with hyperinflation, Hungary's inflation got so out of control that you had to get paid 3 times a day, and you're paying trillions of whatever their currency was for a loaf of bread. We've had all of these catastrophes, and yet I think Buffett mentions like early on in the 20th century, was it the Dow was like $66, and at the end of the 20th century, it was 11,000.
Yeah.
Right. Like most people are not going to live 130 years. I get it. But, the point of this is not to despair. Right.
Yeah.
It sucks today, but you're working for a better tomorrow. What do people always say when they have kids? Well, we're suffering today so our kids can have a better life. Right. You're always, this is the American mentality that you suffer today so you can have a better tomorrow. And A Better Tomorrow, coincidentally, is one of my favorite Hong Kong action movies.
No, but you're absolutely right.
Don't despair.
No, you're absolutely right, and that's the whole message here, right? It's like we're providing you with some depressing numbers and news.
That's our job.
But we're providing opinions.
Ourselves.
Yeah, but we're providing opinions that can help guide, hopefully, right? But we also have to understand there's hope, right? Don't live in the moment, right? It's like investing. Don't look at the moment. Zoom out, right? And you'll see that life, society, the markets always go up, no matter what. It always goes up. So with all the geopolitics going on right now, with the way the economy is, everything
and
that's
the way
going
the
on,
economists are.
is don't lose hope, right? America will always come out on top. The world will be a better place down the road. There's always rough patches. That's just human nature, but we'll come out of it. So have hope, be prepared, and listen to our podcast. But that's just throwing it out there. But and the last thing I'll say, that the funny thing I sent you this about millennials, right? Us millennials,
we had
Y2K, we had September 11th, we had 2 recessions. And now we're facing these matters. Oh, we had COVID pandemic.
The pandemic.
Right. But, we're going to get through it and we'll get better.
Before you're 40.
Yeah. I'm only 32 and I've already felt
Not yet. Not yet.
So almost 32, but I've already felt all this. So don't lose hope. Live life. Be prepared. And just have faith. We will get out of this. And this is a lesson for future leaders too, like ourselves and others are growing up, is to learn these lessons and to learn these core values and principles and be a leader.
Yeah, absolutely. Couldn't have said it better myself. And part of being a great leader is always listening to our podcast and doing what we say.
I love it.
With our First Amendment protected opinions.
Absolutely. Thank you, legal counsel. Anything else, Willie?
No, I think that sums it up rather depressingly.
Sounds good. On to the next.
On to the next.